But for now, we want to get to the tech focus here. And we're going to be talking with Laura Martin here, Needham Co's Senior Media and Internet Analyst. Thank you so much for joining us. So, I mean, we have this rate rising environment. We have what we're seeing with the yield curve. I mean, we're still seeing very high tech valuations. Yet, year to date, tech's still doing well, one of the top performing sectors in the S&P. Do you have some top picks in this very strange environment?
Sure. I really like Apple here because it's got $90 billion a year of free cash flow, which makes, and as other companies get more distressed under the rising interest rate environment and their cost of capital is going up, that makes it a better acquisition market for Apple. So that would be my top pick in this environment.
And what sort of criteria are you using when deciding? Obviously, not all tech is created equal. Some companies have some internal issues as well. What sort of criteria are you using at the moment?
So mostly as discount rate goes up, companies that don't make money in today's world, their future cash flows get discounted back more harshly into a lower value. So my criteria right now is maximum free cash flow in 2023 and 2024. And by that metric, these big and liquidity, you'd like liquidity in case something goes wrong so you can get in or out. Apple and Google both have very strong free cash flow. We would be less positive on Meta. We haven't underperformed because it's under, revenue declines, and that means its margins and its free cash flow are shrinking every single quarter, year over year.
And we know that recently you were in DC getting really the pulse of what's happening with regulation, with tech, especially the FAANG stocks. In terms of who's doing the best job navigating their alliances and really getting their priorities heard, you said Google doing the best job, Meta doing the worst job. Walk us through what they're doing differently to sort of get this impact.
Yeah, so I'm a visitor to the Washington, D.C. ecosystem, and they are all experts in that ecosystem. And so what they said was, when you go in and try to argue your own case, it appears self-serving if you're Google or Amazon or Apple. But if you fund, think tanks or fund independent agencies and you ask them for a topic that you're going to turn out well, and they write the white paper, and then they go to Washington, D.C. and say that Google is the champion of, for example, small business, that's really effective. Even though it's a Google-funded study, it's about a broader topic that actually policymaker cares about. That's an effective way to get policymakers to back off hurting you. And so that's what Google does really well. They're really good at using alliances and other third parties to, figure out ways that Google is helping the U.S. economy. Meta is just perceived as missing the plot. They don't read the room well. They don't really understand the DC issues. And so they just don't do a good job because of ineffective execution in Washington, D.C., according to the people I spoke with, which was a small sample.
And you also talked to this idea of sort of the metrics that regulators are using in determining who they scrutinize. And size seemed to be one that came up, which is an interesting metric here. But you're really saying that perhaps regulators might not be getting the full picture, especially since we saw less attention as Meta's market value then fell. So talk about that dynamic and what you think regulators perhaps might need to hone in on to get a full picture when they're trying to figure out who to scrutinize.
Yeah, investors will find this impossible to believe, but I heard from two experts in Washington, D.C. last week that Meta has become increasingly not important as its market cap is halved. That when it was $1 trillion, regulators really wanted to regulate it. But now that it's like $500 billion, now it's $500 billion, they don't think it's as big a threat, which makes absolutely no sense from any kind of economist or economics point of view. But that, they're lawyers in DC, so I guess they have their own frameworks.
And I want to ask you about some of the antitrust issues that have been coming up, because, there's been a lot of discussions around it, but the actual laws on the books haven't really changed to adapt to how broadly some of these tech companies are now spreading into different avenues. What are some of the most significant antitrust issues that have been being discussed?
It's really interesting. So the laws on the books are like from the Sherman Act and the Clayton Act, and those are the laws on the books. So, and then there's this policy debate going on in Washington, D.C., including sort of being spearheaded by the FTC, the Federal Trade Commission. And they're trying to rethink, so historically antitrust laws has been, are we lowering consumer price? If a merger was going to happen and it was going to lower prices to the consumer, it was approved. But now they're thinking through lots of policy issues about maybe if it hurts other companies the way Amazon does, then it shouldn't be approved. Even if you bought it, it would lower price to consumers. Maybe that shouldn't be the standard. Maybe it should be putting other companies out of business should be the standard. So they're having all these talks. But the problem is, for example, the FTC tried to block an acquisition Meta was making. The courts threw it out because the laws on the books are the laws from a long time ago. So there's nothing in writing about these new policymakers. So the FTC thinks new policy should be made. But until there's laws on the books, the courts are upholding the old laws. So the regulatory agencies are going to lose in court when they try to, argue things on these new metrics of antitrust, because they aren't laws. So the legislature, meaning Congress, has to actually make a law before the policy can be implemented in the courts and upheld. Otherwise, all those old laws apply and consumer standards continue to reign supreme.
We'll be keeping an eye on the M&A space then until we do see some changes in those laws. Needham Co senior media and internet analyst Laura Martin, thank you so much for joining me this morning.